flooded with sometimes even Wednesday, but Friday, if you look at every Friday, if you develop a habit, every Friday night, because this particular amendment of which Sunilji is referring to, it is still not appearing in SEBI's site, but it was gazetted copy which came to us through social media. So the amendment part, SEBI website is yet to give effect to this amendment in their website, but we have already seen that. So today, since last Friday, Saturday till today, we have seen 3 orders, one settlement order and 2 adjudication orders. In one case where IBREL, I will use abbreviations here onwards, IBREL CFO dealt in the shares of the company. What happened is IBREL is a listed company and its promoter group entity, IBREL IBL scheme trust, that trust was about to dispose of some 6.5% approximately shares of IBREL, which is a listed company. CFO was aware about this input, and as soon as he became aware about this, he disposed of 10,000 shares which he had acquired under ESOP scheme. And he properly took pre-clearance from a compliance officer and then he disposed of. But while giving pre-clearance, obviously compliance officer asked for a declaration that he does not hold any UPSI, and which he gave, whereas actually he was possessing UPSI. And the profit which he would have made was around 2 lakh rupees or so. However, minimum penalty of 10 lakh rupees was imposed. So as we know, minimum 10 lakh subject to 25 crores and or 3 times of the minimum 10 lakh or 3 times of the profits made or 25 crore, whichever is higher, whichever is lower. So accordingly, he was levied a penalty of 10 lakh rupees. He argued that the shares which I had acquired was under ESOP and therefore disposal of those shares acquired under ESOP should not be covered under EIT regulations. And SEBI categorically said, and this we have been discussing in last 11 sessions, that as far as ESOP exercise is concerned, you can do that while in possession of UPSI, while the window is closed. Contract rate restrictions are which are acquired under ESOP. However, you cannot dispose of those shares when you are in possession of UPSI. So this was very relatively very simple. And a similar case to similar situation was Jagran Prakashan, where compliance officer himself had disposed of his and his wife's shares held in the company. When a promoter company was going to sell some shares. So it's not only information about the company, but information about the securities of the company is also UPSI. This point also I had highlighted earlier when we discussed about UPSI. So second case is about one gentleman who has been working in one listed company, which also is a SEBI regulated entity, JMFL. So he has been working in an operations part, and he was also involved in one of the takeovers of the some listed companies where he merchant banker. Yeah, Sunil.
You are not wanting to share any screens so far.
No, I'm yet to.
Okay.
I'm yet to. This is just what happened since Friday to today. Then we'll come to today's trading plan subject, definitely. Yeah. So the person who was involved in that merchant banking, as a merchant banker, Steen, he was involved in that deal of takeover of a listed company. United Spirits was being taken over by Diageo. At that time, he was involved, and he, along with his in-laws, were penalized at that time. Subsequently, SEBI also investigated about his dealings in the company JMFL, in which he was working, which is the list. JMFL is also a listed entity. And there they found that during window closure period in 2014, he had transferred off-market transactions. He had transferred his shares to his mother-in-law, and for which again, he settled the matter. Penalty of 15 lakh rupees was levied on him. So actually, there is no case in terms of public. He's selling it to public as of now. It may come, but the minimum penalty of 15 lakh rupees is levied irrespective of the profits made, because actually he transferred to his mother-in-law. But still, since he transferred during window closure, window was closed from 14th October 2014 till 5th November 2014, and he sold on 21st October 2014, for which he was levied a penalty. So this point also highlights one more important thing, that once SEBI finds somebody dealing in doing insider trading, there are chances that SEBI may look at your historical other trades also, because if you have violated once, there is a large possibility, there is a big possibility that you might have violated earlier also, and therefore SEBI may look at earlier trades and separately levy penalty for each of that non-compliance. Now, this needs to be sensitized to the designated persons working in fiduciaries, intermediaries, and listed companies, all of them. Then the case which Sunil ji also mentioned about compliance officer getting penalized for not closing window. This is a classic case. Someday we will discuss about whether there was a UPSI at all in this particular situation where SEBI has penalized a compliance officer for not closing window, but whether there was a UPSI at all, because the underlying transaction which was which is discussed in this particular case was rupees 4 crore rupees of transaction, whereas companies profit were hundreds of thousands of crores, and therefore it was insignificant transaction, but still SEBI has considered that it is material and it is a UPSI, and it will be interesting maybe week or thereafter to discuss as to why SEBI actually considered that as UPSI. So these are three landmark cases. This third case is very, very important because window closure not only when there are financial results or dividend or M&A, but even acquisitions at step down subsidiary level are considered as UPSI, and we are compliance officers are supposed to close the window. It's again it is getting highlighted, and as Sunilji has already highlighted, yesterday midnight their amendment notification has been published in Gazette, with respect to amendments in insider trading regulations, and there are 4 or 5 important amendments. And next Saturday, we will discuss those in detail in 360-degree angle. So probably everyone attending this seminar already knows what are those amendments, but we will look at those from 360-degree, from various perspectives we will look at and try to address that particular those amendments in detail next Saturday. Coming to today's discussion, which is about trading plan. And trading plan is very, very, very less popular in India. Not many companies have used it for obvious reasons. The people who are participating in this today's seminar would have the reasons why trading plan is not popular. And therefore, since it is not popular, there are chances that one may ignore or one may put this particular regulation as an optional subject. And therefore, I thought that I will at least cover uh, trading plan as a subject, because I have observed many companies and many large companies announcing trading plan and compliance officers approving trading plan, which are wrong, which are not in compliance with Regulation 5. We will discuss about those, particularly in the context of day before yesterday's pronouncements, where compliance officer was penalized for not closing window. Compliance officer can also be penalized for approving a wrong or inappropriate or incorrect trading plan, and therefore compliance officer role becomes very, very important. So far we had 11 sessions, and this is the list of those 11 sessions, and I believe Sunilji and his team has already hosted majority of those webinars on their YouTube channel Aksar Digital, and you can always visit those this YouTube channel and access to any of these topics if it is of particular interest to you. I would urge all of you that webinar number 4, which was on policy procedure mechanism. If you have debt listed company, then webinar 5. Pledge is very, very important, and you can also look at 6, 7, 8. That is pledge, UPSI versus generally available. And what is UPSI and when UPSI comes into existence? Because when UPSI comes into existence, compliance officer has to close window. When UPSI comes into existence, entries need to be made in SDD. All of that compliance gets gets triggered, and if there is any non-compliance, then we need to report to SEBI. And now, as per this amendment, to stock exchange. And therefore, these 6, 7, 8 are the webinars which one can look at. If any of you have been working in SEBI intermediaries or fiduciaries like chartered accountant, cost accountant, lawyers, company secretaries, merchant bankers, brokers, analyst, investment advisor, all of that, then you can also visit webinar number 10, which is about fiduciaries and intermediaries. Last webinar was about designated persons and who all are considered as designated person. We had discussed a lot of cases. And today we would look at what is with respect to everything with respect to trading plan. Today's session is one of the today's PPT is one of the longest PPT in whatever I have presented so far. There are around 28 slides. One thank you, one opening. So 26 slides, which I have to consume. First question which we'll deal with: what are the options to deal in the shares for promoter of a listed company, CEO or CFO of a listed company? Then we have already looked at para 4 D for para 4B 3B of para 4 of Schedule B, which categorically says that SEBI regulated transactions, preferential issue, conversion of bonds, stocks in debentures into or warrants into shares, or any other preferential issue, right issue, bonus issue, public issue, ESOP. All of those are out of window closure requirement. And SEBI's intention appears that if it is a regulated transaction, then pricing and all is anyway regulated by SEBI's regulations, separate regulations dealing with those. For example, buyback or delisting. There are separate regulations, or takeover, there are separate regulations. So they deal with the pricing, announcements, public being aware and all of that. And therefore, insider trading takes a little backseat. So if promoter, CEO, or CFO is participating in any of these transactions, generally he has a cushion that this can be a defense if SEBI charges. Further acquisition of off-market transfer between two insiders, block deal on a stock exchange between two insiders, open offer to public shareholder, open market stock exchange transaction when person does not hold UPSI, and open market transaction through trading plan. These are the available routes for CEO and CFO. Second last two bullet points are very, very important. That generally the principle is that when he possesses UPSI, obviously he is not supposed to trade. But there are certain people who are actually in possession of UPSI, like CEO, CFO, or some of the promoters. And now, in the context of SDD coming in picture, and all the companies are mandated to maintain SDD, structured digital database, and which will bring complete transparency about who possesses what UPSI. And therefore, having, the earlier case which I shared, the CFO took a pre-clearance from a compliance officer. A compliance officer in today's scenario would have looked at SDD, and if CFO's name is appearing in SDD for any of the UPSIs, then obviously he will not give permission. So in this context, it becomes very, very vital to understand the importance of trading plan. Is that as far as primary issues are concerned, there are exemptions, but as far as secondary market transactions are concerned, there are no exemptions. First principle is that when you possess UPSI, when your name appears in SDD as if you are possessing UPSI, then you are not supposed to trade. Even if there is no UPSI in your name, or you are not appearing, your name is not appearing in SDD as in possession of UPSI. Even then, out of 1 year, 6 months goes in window closure. So window closure period, you cannot anyway trade. You cannot do contra trade. So therefore, when the window is open, when you have bought, you cannot sold for 6 months, sell for 6 months anyway, irrespective of whether you possess UPSI or not. And over and above that, there are pre-clearance requirements, stock exchange disclosures, and so on and so forth. And therefore, particularly after the introduction of SDD, it has become very, very pertinent for promoters or for CEOs or for MDs or CFOs who possess UPSI perpetually to resort to trading plan. And therefore, there have been attempts, particularly in 2020, I have seen some cases where trading plans have been approved by a compliance officer. We will see those cases also in today's discussion, and whether those trading plans are in compliance with Regulation 5, which is the charging section for trading plan, That also we will look at. And the idea of sharing this is sensitized amongst the audience that there are very stringent requirements about trading plan. And if you are approving trading plan, then we have to be very, very careful. So in this context, Sodhi committee recommended that trading plan needs to be introduced, and accordingly, trading plan was introduced in the SEBI prohibition of insider trading regulation in 2015. It was not there in 1992 regulation. So what are the minimum conditions to be complied with in regulation 5? Is that first of all, trading for a period not less than 12 months. So this is very, very clear that it has to be spread over a period of longer period of 12 months. Second principle or second condition is that when you submit trading plan, the first trade should not be prior to end of 6 months, and therefore the commencement period, there has to be a cooling period of not less than 6 months, which compliance officer has to ensure that whenever any insider, the word here is not designated person but an insider. So when any insider approaches a compliance officer with a trading plan, he has to ensure that commencement of trading happens only after 6 months. But there was a lot of discussion in Sodhi committee report as to whether this should be 6 months period or can there be a little lesser period, particularly in the context of US regulations, which at that time at least did not had any cooling period like 6 months. However, Sodhi committee observed that in US there have been instances where this trading plan has been misused because of the absence of any cooling period, and therefore Sodhi committee thought it appropriate that there should be a minimum cooling period of 6 months. There was also discussion as to whether this cooling period should be of less than a 6 months in 90 days or something like that. But Sodhi committee at that time said that let the market evolve and then we can look at. Third condition, which is very, very stringent, it says that trading cannot be done between 20th trading day prior to the end of quarter and second trading day after the disclosure of quarterly results. Now look at these wordings: 20th trading days prior to the end of quarter. Now 20 trading days prior to the end of trading days prior to the end of quarter means trading days means Saturday, Sunday gone, and so 20 trading days means 4 weeks. So almost it takes more than 45 days plus almost 26 days or 27 days. So it carves out every quarter almost 70 days. So what you are left with is only 20 days, and therefore this is a very, very stringent requirement under trading plan, and it makes almost 300 days non-operational for a listed company, and trading plan can be implemented only in 60-65 days. So we would look at those stringency. Should not overlap. So trading plan should not overlap over any other trading plan of your own or of any other insider. So SEBI considers that there can be camouflaging by two or three people. One person will say that I will buy, another person will say I will sell, or two people will come out with a trading plan to mitigate the risk. All of those have been prohibited under trading plan conditions under Regulation 5. Trading in securities must not be for market abuse. What is this market abuse and what does this condition mean? We will see with the help of some of the US pronouncements for better understanding. Last three conditions are very, very critical, and I have observed many companies and many compliance officers who are approving trading plan are actually not looking at this particular condition. That in trading plan, either we have to insider has to mention a value of trade or number of securities to be traded, along with nature of trade, that is buy or sell. Generally, this second condition, nature of trade, everybody has been complying with. Third condition is very important. The trading plan should mention the interval or the dates on which trades shall be done. And this is very, very important. And many, or rather, I would say that maximum trading plans, whatever I have observed, whatever I have seen on stock exchange, does not fulfill these conditions. And therefore, whoever has approved those trading plans, there is a serious question on this. Second question in this context comes is, can trading plan be cancelled? So once I have submitted a trading plan, now that trading plan is required to be approved by compliance officer. So once it is approved by compliance officer, can it be cancelled at all? So So the condition for regulation 5 subregulation 4 says trading plans once approved shall be irrevocable, and that's why probably those who are very smart and those who are very literate, they are not encouraging their promoters to come out with trading plan, because first of all cooling period of 6 months, and you have to commit a date or the interval, and you cannot revoke those trading plan dates. Therefore this becomes very very stringent. You can neither deviate from it, and neither you can execute any other trade. So for example, in a trading plan you have given a condition that I will buy so and so value of shares on X day. Now you cannot withdraw it, and therefore to offset that you may try to enter into contra transaction. Now that is also prohibited. It clearly says that you cannot enter into any trade outside the scope of trading plan once a trading plan is submitted. There is there is one exception to this, which says that implementation of trading plan shall not be commenced if any UPSI in possession of the insider at the time of formulation of the plan, if that has not come in public domain, if that has not become generally available, then that trading plan needs to be deferred, and compliance officer needs to ensure that it is deferred. So the question which comes is, if trading plan is submitted to compliance officer, but compliance officer has not yet approved it, can it be revoked? In my view, although there is no black and white answer in regulation 5, but it appears that so long as it is not approved by compliance officer, it should be considered as revocable, is my submission. Second discussion, very, very important, is what is relevance of UPSI in trading plan? As we know, this was particularly introduced for people who are perpetually in possession of UPSI, and therefore this question becomes very vital. Now, under regulation 5, under regulation 4, 5, sub-regulation 4 and sub-regulation 3, there is a reference that compliance officer can always seek a declaration from the person who has approached compliance officer. A declaration saying that he would ensure that this the person who is insider. He would ensure that any UPSI in his possession becomes generally available before he commences executing his trades. And if it does not become public, because it is not up to the insider to ensure that it becomes generally available, there is a possibility that some assignments or some transactions may get dragged, and therefore it does not become generally available. And in that situation, trading plan cannot be implemented. So the question which arises is, for example, if on 1st January or on 31st of December, if an insider approaches a compliance officer for approval of trading plan, and trading plan is starting from 1st of July 2020, the UPSI which insider was possessing on 31st December 2019, that UPSI has become generally available. However, on 1st of July, when the first trade is going to get executed, he is possessing some other UPSI. Can he execute trade? Will he require pre-clearance and all of that? Now, it is very, very clear that if another UPSI has come into existence, once the trading plan has already been approved by compliance officer, then that will not stop the trade of under trading plan, and the trade can go ahead, because now market is aware and he has committed that he will do buy or sell transactions either on X day, and therefore he has to execute that day, irrespective of the other UPSI. And it is presumed that this UPSI, which has come into existence subsequent to the approval of trading plan by the compliance officer, it is presumed that the insider or the designated person was also not aware about that UPSI when he submitted the trading plan, and therefore it is presumed that if he comes into possession of UPSI, new UPSI comes into his custody or in his possession, it will not block him from executing trade. Compliance officers to defer is very, very critical, as we have seen in the earlier slides, and so the committee also suggested the same thing, that generally why 6 months period, because there is a belief, if you see prohibition of insider trading regulation, that within 6 months generally a UPSI will either come into generally it either will become generally known or it will evaporate, that is the deal may get cancelled, and therefore 6 months is the general period which is prescribed under trading plan. However, there can be exceptions and some assignment may get dragged, and if that UPSI has not generally become available, then compliance officer should not allow implementation of trading plan and he should defer that. Role of compliance officer with respect to trading plan is very, very important. First of all, trading plan, unless and until he approves trading plan, it cannot go ahead. While approving that, he needs to ensure that all of the conditions which we discussed some time back in earlier slides, all of these regulations and regulation of generally the regulation of insider trading provision are complied with. That's the predominant and important role of a compliance officer. And if he fails to do that, and if he gives clearance to a trading plan which is strictly not in compliance with Regulation 5, then he may attract personal liabilities upon him apart from the other consequences which may arise to that insider. Compliance officer is entitled to seek such express undertakings and declaration as he may deem necessary. And once he approves that, then he has to disclose that trading plan to the stock exchange. And not only disclose that to the stock exchange, he should also monitor the implementation of the trading plan, and wherever or defer the trading plan wherever that UPSI has not come into existence. So these are some minimum compliances which a compliance officer is supposed to discharge. And if he fails to discharge, then obviously he can personally get dragged. And we have seen multiple cases like Mannapuram, Satyam, Valecha, even Piramal, and now Ambit, and so many other cases where compliance officer had either to settle with SEBI or through adjudication processes. Compliance officers have been personally penalized the penalties to the tune of 15 lakh, 5 lakh, and so on and so forth. So this becomes very, very important. What are the disclosures with respect to trading plans? So first of all, a trading plan needs to be disclosed, and pursuant to those trades which he executes, if it crosses beyond 10 lakh rupees, then obviously under regulation 7.2, a disclosure will have to be made by the person who has traded, and then the compliance officer will have to make a disclosure to the stock exchange. Similarly, under SEBI SAST regulation, after crossing 5% limit or 2% limit under 29.2 and 29.1, again, a disclosure will be made to the stock exchange, and compliance officer will have to see to it that those disclosures are made. Now, interestingly, there is no requirement requirement as to within how many days compliance officer has to uh, disclose that particular trading plan to the stock exchange. It is expected that he should disclose immediately or as soon as possible. However, anyway, the trade cannot be earlier than 6 months, and therefore 1 or 2 days. I have not seen any case where once he approves trading plan and his uploading of the trading plan, there is a gap of 1 or 2 days, and neither SEBI nor stock exchange, obviously SEBI in this case, has not levied penalty in any of the cases. Uh, some question that arises is there any intimation to stock exchange at the time of commencement of trading plan? No such requirement. Is there any requirement of intimating deferment of the commencement of trading plan? No such requirement. Is there any intimation requirement on the completion of trading plan? No such requirement. So I presume that SEBI would definitely think about it. Whenever trading plan regulations are overhauled, these disclosures can also come, because whether trading plan has been implemented by the person who had proposed that trading plan is a very, very vital information which for general public's knowledge which one should look at. So the committee discussed, suggested one member had also suggested that trading plan should not be informed to stock exchange, or it can be informed only when there is a particular threshold, beyond particular threshold. Committee concluded it would be only appropriate to entail public disclosure because this was a new experiment as such in India, and since they had looked at a lot of manipulative practices in past in US, and therefore they chose not to give any such relaxation, and therefore the trading plan is required to be disclosed. Now the question also arises as to whether is it mandatory on the compliance officer to take a declaration when somebody submits trading plan. It is not mandatory because the word appears may, but the may has to be read as shall by the company secretary is my submission. Because if it does not take any declaration, and if he does not verify SDD particularly in this situation, then it can attract personal liabilities to him. There was one informal guidance in Hawkins where one independent director had submitted a trading plan. And when independent director submitted a trading plan, compliance officer asked for a declaration that you do not possess a UPSI, and he felt something wrong in that, and he approached SEBI saying that, can I go ahead with my trading plan without giving such undertaking? SEBI said that nothing doing. Compliance officer has asked, and you have to provide this particular declaration. Without that declaration, you will not be allowed to proceed with a trading plan, and compliance officer cannot compliance officer need not approve your trading plan unless and until you give this declaration. This happened sometime in July 2018. um, One more very critical question we will take, and then we will take some of the cases, is that whether dates are required to be mentioned in trading plan, or can I mention a period? Now, if you look at regulation 525, Roman 5, it says that trading plan must mention intervals or dates on which trade shall be done. Now, what is the meaning of interval? And can somebody treat interval as a synonym with period? So therefore, I thought that I will reproduce dictionary meaning. And interval means an intervening time, or a space or pause or a break, or a period between two events or time. So if it is a period, 15 days interval, 30 days interval, 7 days interval, 5 days interval, and so on and so forth. So you can provide an interval after which the trade can happen, or this particular dates. But what is period? Period is the length of a time, and therefore length and period and interval are not synonyms. I have observed majority of the trading plans have disclosed period and not intervals or not dates. I have given examples of dates that either you can provide X day, so on 15th of February or and 15th of March, something like that. You can 15th of March cannot come because 28th day prior to the closure of financial result period, your trading window, your trading day cannot be of that day. But you can either provide dates, or you can provide interval of 15 days, interval of 3 days, interval of 3 months, or something like that. You can have as long as you want. It can be 2 year, 3 year. Minimum is it is expected to be of 12 months. Right? Now look at some of the trading plans in a recent time, which have been approved by compliance officer and uploaded on the stock exchange. This is RTSPC Limited. I have to change the style, and I have not giving the names of the company. RTSPC Limited, dated 7th January 2020, and then there are three individuals who have suggested that we will enter into purchase transaction of a particular number of shares. So nature of transaction is disclosed, number of shares are disclosed, but then here it comes trading period and not interval or dates. Further, it says that the said trading plan shall commence from 7th June 2020 and shall end on 6th June 2021. The said transaction may be done in one or more transactions. So one or more tranches, on which dates, how many shares he will purchase, nothing is disclosed. No dates are mentioned, no intervals are mentioned, just period is mentioned. And further it says that the said transaction shall not entail trading of securities for a period between the end of the financial quarter till the results are disclosed 2 days after that. However, the requirement is 20 trading days prior to that financial ending period, and therefore this particular last bullet is not in compliance with 20 trading days period, and this particular trading period is not in compliance with dates or intervals. One more example, insider who was a designated regional chief operating officer. He submitted his trading plan on 10th of January 2020, and trading was proposed from 3rd June to 29th June. Now there are multiple violations. Sunil ji, am I audible? Am I audible?
Yes, you are very much audible.
Yeah, I got some message that there is
No, I
unstable
can hear you
internet
loud and
connection.
clear. I'm basically keeping myself muted, but that is not to say that I can't hear you. I can
No,
hear
no,
you loud.
thank you. Yeah. So in this particular plan, FHL, January 2020, Look at this period again, the dates have not been mentioned, right? Number of shares, number of securities have been mentioned, right? And the nature of transaction is also mentioned. But what is not mentioned is sale. So nature of transaction is mentioned sale. 3.5 lakh shares, equity shares will be sold from 3rd June to 29th June. The date on which he will enter into transaction or interval within which he will enter into transaction, that is not mentioned. 10th January he submitted a plan and started on 3rd June. Therefore, gap of 6 months is also not there between these two dates. And this trading plan is of only 26, 27 days. It is not of 12 months, which is minimum requirement. So minimum gap of 6 months is not complied with. Minimum period of 12 months is not complied with. And date and interval also not complied with. That 28 day prior should not be done. That is also because this is 29 June, whereas 28th trading days prior to the end of the quarter also you cannot have trading. So this plan is full of non-compliances, still approved by CO and uploaded on the stock exchange. Let's see if so these mistakes compliance officer should avoid. So this is KMB. On 31st December, this plan was presented. He Now what he is suggesting is he is going to sell 250 number of shares from 9th November till 13 November 2020. Now again, the plan for more than minimum 12 months is not complied here, and exact dates are also not mentioned. From to, so generally people are giving period, but period is not a word. Word is interval, and therefore trading plan should be for 12 months. But those dates needs to be specifically mentioned, and which were not mentioned even in KMB, which is a very celebrated company. Um, and these are some of the trading plans, very recent trading plans, and some of the celebrated companies approving trading plans. But to my knowledge, these are not in compliance with the trading plan. Now, what happens if a trading plan is approved by compliance officer, and if there is a non-compliance? For example, if he does not comply with the dates mentioned, or if he does not enter into those transactions, or if he enters into any transaction which is outside transaction which are mentioned in trading plan. For example, he has mentioned that I will purchase 2.5 lakh shares. However, he also sold some shares, something like that. Can he do that? Now, if he does that, or if he changes the dates, something like that, if it happens, then what's the consequence? Consequences under Section SEBI Act 11B, there can be disgorgement of profit or disgorgement of loss. So generally, deviation in trading plan may happen to make profit or to save loss. In either of the cases, there can be disgorgement of that loss saved or profit made by the SEBI. And 15HB, where there is no separate penalty prescribed, minimum 1 lakh subject to or maximum 1 crore penalty can be imposed. And such penalty can be imposed under 15HB not only on the insider, but also on the compliance officer. Therefore, it is very, very pertinent to note, to take a note of this by all the insiders who are, all the compliance officers who are participating in this. I'm sharing only two cases in US, which actually will give guidance as to why this particular stringent trading plan was introduced in India. Now, this Mozilla versus ACC 4 June 2009 case. The company's chairman had proposed a trading plan in his capacity individually as a trustee, as a beneficiary, etc. Now, just before the proposed dates of trade, he used to make some disclosures to stock exchange, portraying a very glossy and growing picture to the market, whereas actually he was aware that the company is not doing well. In fact, his chief risk officer, credit risk officer, had already given him the risk report which had highlighted the very weak part and the difficult part of the company. He was aware that the company's business is falling, but to ensure that at the time when he is going to do a trade as per the trading plan, he used to plant some news, giving some positive news, and then ACC said that no, this is the manipulation of market. And this is what I had mentioned, that even in regulation 5, there is a mention that abuse of trading plan should not be allowed. Now, this is an abuse. Now, since you cannot change the date, you may choose to make some announcement which will favor your trading plan dates and transaction. Now, this is also investigated by SEBI and therefore SEC in USA, and therefore that particular requirement. Therefore, this particular requirement of cooling period, irrevocable, and 12 months long period, and approval of compliance officer has come. One more case of Enron versus SEC in 2014. What happened is he was the individual who was a former senior executive of Enron, and he proposed a trading plan for his firm, for himself and his family partnership firm. And then he subsequently became aware about the distorted financial position of Enron and falling profits. Now, what he did is he amended his trading plan and sold the shares before the information goes to public, and thereby avoided losses. And again, changing trading plan was not allowed even in USA, and therefore he was also levied a very stringent penalty in this particular subject. So, trading plan is not allowed to be changed in USA, and it is not allowed in India because of this particular reason. There is one more case of Liverpool where trading plan of less, notice period was very less. And in fact, SEC's FAQ also says that there is no minimum cooling period as such. However, it should not be misused. And therefore, looking at these experiences, SEBI thought that 6 months cooling period should be minimum prescribed in trading plan. Some more comparisons will also help us understand what is this trading plan and what is pre-clearance. Now, once I have given a trading plan, do I require a pre-clearance? Can I enter into contra transaction? Now, these are also some of the basic questions which comes in anybody's mind, and therefore I thought that I will give a comparison. Now, as you know, pre-clearance is generally sought by a designated person, whereas trading plan can be submitted by any insider. In pre-clearance is required only when the value of trade is beyond a particular threshold, whereas in trading plan, it is not whether it is of high value or low value. Any trades you can prescribe and comply with those trading plan requirements. And important thing is, while giving pre-clearance for a pre-clearance under pre-clearance requirement, compliance officer has to check that whether the particular person who has approached for pre-clearance, whether he possesses UPSI at that time. Now, as far as trading plan is concerned, at the time of executing trade, the person who has proposed the trading plan, he may be in possession of some UPSI. But so long as the UPSI which he was in possession of at the time of giving trading plan, that UPSI is no longer in his custody or in his knowledge, then that is not considered as bad in law. And most important is, once trading plan is approved, then you don't have to take a pre-clearance again and again for each time the trade is executed. So this is what the difference between pre-clearance and trading plan is concerned. Trade under trading plan flow. This is very, very important. Now, as we saw under regulation 522, it says very clearly, much beyond trading window, it says that trading cannot be done between 28th trading day prior to the end of the quarter and the second trading day after the disclosure of quarterly results. So definitely a standard window closure with respect to financial results, you are not supposed to trade. However, once trading plan is approved, right, and subsequently, once trading plan is approved by the compliance officer, and then subsequently that particular insider or a designated person become aware of some UPSI, and because of which a window is closed for him by a compliance officer, that will not block him from executing that trade, because that is other than financial results window closure period. So, but the trading plan cannot be in window closure, and trading plan key can be in window closure. Both these statements are right based on this analysis. So this is the scenario how it stands. Is contract trade restriction applicable to trading plan? Again, the contract trade restriction is not applicable to trading plan. In the sense, you can say that I will buy 10,000 shares today and I will sell 15,000 shares tomorrow in trading plan. And so long as there is the cooling period of 6 months and a total trading plan spanning over a period of 12 months, and your trade should not be in those particular dates. So long as you made these conditions, and so long as the UPSI which you were possessing at the time of submission of trading plan is no longer in your custody, then contra trade can be proposed in trading plan, and it's perfectly fine, right? That's not a problem. So contra trade if proposed in trading plan is fine. However, if once you propose a trading plan, then you cannot enter into an additional trade, which is a contra trade. You cannot enter into any additional trade during the trading plan period. So therefore, entering into separate contra trade is not possible. Some of the examples, like if I have proposed trading plan, does it block me from exercising ESOP? Or does it block me from subscribing preferential issue? Or does it block me from pledging my shares or releasing those shares? Now, these are the questions which are unanswered, and we should wait for SEBI's informal guidance, and the SEBI can throw some light on it. As of now, I feel that probably ESOP and preferential should be out of the. It should not, trading plan should not block these particular transactions, because SEBI in its earlier guidance had said that ESOP is excluded from the trading concept itself, and that's what the view was SEBI had, and therefore ESOP clearly should be exempted. But we should wait for proper informal guidance on this before approving any such transaction for our designated persons. Now, next question is, can a fiduciary, like a person like me or a team member or any of my partner working with MMJC, if he wants to come out with a trading plan, can he come out with a trading plan? Yes, because it's on, any insider can come out with a trading plan, and he has to submit to compliance officer. Now, which compliance officer is a logical question? My MMJC's compliance officer or the compliance officer of a listed company in which he is proposing to deal with? This question is unanswered. And in my view, both the compliance officer will have to work in collaboration, because compliance officer of a listed company, he would not know whether, because while the UPSI is shared by a listed company to a fiduciary, only the name of the fiduciary and the entity's name and PAN number is mentioned. Now, whether a particular individual working in that particular fiduciary, whether he is possessing of that UPSI or not, that listed company compliance officer would not know. And similarly, compliance officer of a fiduciary also may want to validate some information with a listed company compliance officer, and therefore none of the compliance officer in isolation will be able to give pre-clearance unless and until both these compliance officers talk to each other, is what is appearing from this analysis. There is one FAQ which is mentioned in USA SEC's website, which said that any alteration or deviation from the plan will be will terminate the trading plan. But if any deviating transaction is done as per the new contract, instruction, or plan, then it is allowed, subject to the condition that it is in good faith and not to evade the trading plan. Probably my presumption is that this is, they want to give exemption to transactions like ESOP or preferential issue. That's what probably they meant to say, and that's why I feel that even in India, probably similar stand SEBI might take if somebody approaches them for informal guidance or through guidance mode. There is no liberty for insider to fix the cooling period. There is a liberty on the to the insiders to fix the cooling period after which trading plan may be executed. And therefore, in India also, there can be an amendment, because not many companies are going ahead with the trading plan. And one of the important condition is 6 months cooling period, which is too long. And 12-month minimum period is also too long. Uh, and
Yes.
therefore probably it is unpopular. Some of the companies which we saw have gone with the trading plan are actually not in compliance with trading plan requirements. And I am yet to see a trading plan which is perfectly in compliance with trading plan requirement and appearing on the stock exchange website. If some participant gets that trading plan, do connect back to me. It will be a good value addition to my information or knowledge. Why trading plan is critical is because of STD now. It will be very clear that some of those key people would be, their names would perpetually appear in SDD as holding UPSI, and therefore giving pre-clearance will be impossible for a compliance officer. In fact, every time he will have to close window for him, and that's what Sunilji also highlighted as to how his software helps closing window for the compliance officer, and therefore it would become impossible for compliance for the such key people to trade. Therefore, trading plan is critical. But trading plans today's condition of almost more than 3/4 period of the year carving out of trading transactions and a restriction of 6 months and 12 months, it becomes very, very difficult for anybody to be successful. These are some of my observations that recently, in fact, SEBI had also sought some suggestions on trading plan, and so that it becomes more acceptable to everybody and to the industry, and so that it becomes popular, and people can come out with a trading plan, promoters can come out with a trading plan, and without violating insider trading they can execute trade. Because ultimately capital market, we need to remember that promoters are the people who actually come out with, they build company, they come out with an IPO, and therefore they should not be deprived from encashing from the shares, so long as insider trading conditions are met. Now, while he is in possession of UPSI, does it mean that he will be barred from buying or selling any shares at any time? And therefore, trading plan needs to be relaxed, maybe in terms of 6 months cooling period, maybe in terms of minimum trading plan of 12 months, maybe restricting a trading plan for material trades only and allowing other trades by way of pre-clearance. Flexibility in contents of trading plan, that is interval and date. Can we say that you know any particular any relaxation in terms of this? Can we provide number of days? So in this week, I will be doing trading, something like that. If SEBI allows, that will be a big breather for the promoters and insiders. And disclosures after completion of trading plan are also very, very important. As of now, there is no requirement as to whatever trading plan is submitted, have you implemented that or not? Because compliance officer approved, whether he executed or he has not executed. By not executing a trade, actually he is in violation of trading plan requirement. That should not happen, and therefore, in order to strengthen that, SEBI may think appropriate to cover this particular requirement. And we also should make an attempt to give submission to SEBI in this. And this is what is from my side as far as trading plan is concerned. We discussed only 2, 3 Liverpool, Enron, and there was one more, all 3 US cases. And 3 trading plans which we saw, none of those trading plans were actually in compliance with the requirement of regulation 5. This is how this situation exists uh, in India as far as trading plan is concerned. And a lot of participants, a lot of elite, educated, highly well-read participants are attending this session. And your views are also welcome as to if any suggestion can be made to SEBI. And at your level, at our level also, we can try to make some representation to SEBI on these lines so that it becomes popular without completely breaching. Now, we have also seen, Sunilji, that as far as SEBI regulated transactions are concerned, preferential issue, ESOP, right issue, delisting, buyback, open offers, those have been as far as those SEBI regulated transactions are concerned. SEBI has said that PIT will take a little backseat. So, although there can be UPSI in a promoter's possession, however, he is allowed probably to enter into preferential allotment. A designated person may be in possession of UPSI, however, is allowed to exercise his ESOP. These kind of thoughts are coming from SEBI, and therefore there are exceptions which are there in SEBI prohibition of insider trading regulation. Some more relaxations can make this trading plan popular. That's it from my side. We can look at chat, and if you have something to say,
Yes.
over to you.
I guess the one thing that I can reiterate, if you will permit me,
Yes,
is
sir.
that, yeah, so if essentially one thing that I would like to reiterate is that Insider Lens allows the CO to ensure that a notification for trading window closure is sent within minutes if the information is sent to him, which the system itself does. So the system itself triggers an alert to the CO of the creation of a UPSI and its communication to one or more people. And with that, the system asks the CO would you like to inform these people that they are now under a trading window closure by issuing them an appropriate notice? And the draft notice is also provided. So all that the CEO has to do is to press buttons and let the notices go, which makes his life enormously simple, and it makes it extremely well compliant with the regulation. So it keeps him safe, it keeps the DP safe, it keeps the entire company safe.
Absolutely.
So this is something that I did want to reiterate. This is for your information. Please pass it around if you'd like to see how we function, how the system functions within Insider Lens. You're welcome to connect with us, and we will be more than happy to walk you through a demonstration that shows you exactly how this works. Yeah. Having said that, let me not continue to market the product, which is something that is well after my heart, and I would like to continue to do that. But today's session is not merely for marketing. So let's go back to the chat and the queries that have been asked. I will go to the top from, I guess, Aarti. Aarti has come back to querying after, I think, 3 or 4 sessions.
Oh, welcome,
yeah.
Aarti.
Welcome, Aarti. And let me give voice to your queries. Will exercise of ESOPs be a part of trading plan, or a DP is not required to mention the same? That is question 1.
As a CEO, you can always insist that you mention the ESOP exercise dates also in your trading plan. However, if a company takes a view based on SEBI's guidance note on this subject, where they had said that ESOP exercise is not a trade per se, per prohibition of insider trading regulation. Relying on that, if compliance officer takes a view that ESOP date need not be mentioned and it can be allowed over and above trading plan dates, I think we have a good case, even if SEBI asks this to the compliance officer, that you have also already mentioned that trading plan, ESOP is not a trade for the purpose of, and that's why contra trade is exempted, pre-clearance requirements are not there, window closure requirement is not there for ESOP exercise, and therefore it can be excluded from trading plan. If compliance officer takes this view, I think it has a very solid and sound footing. So it should be acceptable. I think there is one more question.
Yes, in between the period wherein the trading, so in between the period wherein the trading plan is running, the shares are obtained by way of succession, and which was not a part of the trading plan, and which also leads to contra. What stand the compliance officer will take in such a case?
Yeah.
These are really...
Now, although there is no express mention, that transmission provisions, transmission cases are out of trading. There is no express mention of that in any of the SEBI's literature, at least to the best of my knowledge. But I presume that transmission is out of word trading, term trading under insider trading regulation. And therefore, succession should not attract contra trade, is my submission, because there is no active action from the DP or the insider, because somebody died and he inherited the shares, and therefore there is no active role played by him, and there is no market abuse. And therefore, I don't think any provisions related to contra trade, window clearance. And in fact, if you remember our discussion in the first, some of the first sessions where we discussed about role of CEO, there we had discussed that during window closure period, if you see the change in hand, and if you see that the change in hand is because of transmission, that is succession, then there is no violation of insider trading, because he has not bought or sold. He has inherited. Somebody died, he inherited. So where is the question of
not by
violation
his
of
desire.
insider trading? Not by his desire, not by his active choice. He has not murdered somebody. So yeah. So it's not a contra trade, and that should be allowed. But very, very valid questions actually.
During the trading plan, can a DP participate in rights issue or buyback if the same is not mentioned in the plan?
Absolutely, because right issue and buyback a year before, if insider is aware, then that itself will be a matter of investigation. 6 months before or a year before he's aware that company is going to come out with the right issue. Of course, the right issue Now there is a fast track, and therefore we have seen the RILs issue happening in lightning speed. But generally, this buyback, open offer, right issue takes some SEBI approval period, and it may consume 2-3 months. But if he was not in anyway, he was not aware about that particular transaction. Second, SEBI regulated transactions have been specifically exempted by SEBI from window, and therefore this transaction should not bar him from participation. Is my submission. So if he has already submitted a trading plan and tomorrow company comes out with a delisting or a buyback or a right issue, and if he wants to participate, I don't think it should bar him from participating in those transactions. Is my submission. No black and white answer from SEBI, neither from any of the informal guidances, nor from any of the pronouncements. This is simply, I am extrapolating, I am extending the principle which SEBI has adopted as far as executing this transaction during window closure. Same principle I am extending further. And the principle there is that these are transactions which are separately regulated by SEBI through a separate set of regulations. And therefore, it will not bar insider trading. That's the logic of SEBI which we see, and therefore it should not bar this my submission.
Great. From Ajay Agashe.
However, Sunil, however, if the promoter himself has introduced such actions as a market abuse,
then
if it is not in company's interest to go for rights issue or bonus issue or buyback or delisting, and just to market abuse if somebody does, then definitely everybody will be, the person who is dealing it may be in deep difficulty. And therefore reasoning of this transaction and recording of reasoning of this transaction in the agenda, in the minutes, in the disclosures is very, very important. The recent pronouncement where compliance officer was penalized, disclosure made by the company under regulation 30, and one of the line or the sentence which company had incorporated in that disclosure was the very, very important litmus test which SEBI adopted. And therefore, what disclosure we make, what we record in agenda minutes while taking these decisions become very, very vital. Even if SEBI asks about if there is a possibility of any market abuse, the company should be in a position to substantiate their stand. Ajay has asked some question that is this trading plan disclosure
in
addition to
sorry, please carry
on. In addition to SEBI to advance intimation before undertaking inter-se transaction, yes. Any intimation under insider trading or under SEBI SAST regulations, those disclosures are separate, and this trading plan disclosure is separate, definitely. Definitely those are separate. And that's what I mentioned, that trading plan, once approved by CO, that is compliance officer, it is disclosed to stock exchange. And then whenever the promoter or the DP, whenever he executes those trades, if it requires separate compliance under any of the regulations under SEBI SAST, that is TECO regulations, or under insider trading regulations, then those are required to be disclosed separately.
Okay, again, one more from Aarti. Directors, promoters are often of the view that once trading window is open, they can execute trade as the UPSI is made public. However, it is very difficult to conclude that he does not have access to UPSI. In such case, whether he is required to execute trade by way of trading plan or pre-clearance would be okay as the window is open.
It is up to him. No? Once the trading plan gives you an immunity, trading plan gives you an immunity that even if you are in possession of UPSI, you can still execute a trade, provided the UPSI which you were in possession at the time of submission of trading plan is not it is not still a UPSI. So provided you meet these conditions, trading plan gives you a clean sheet that even if you may possess some UPSI or other, you can execute a trading plan, that is execute trades of X value or X number on given date or on given interval. So trading plan gives you an immunity. If you are sure that you do not possess a UPSI, then you need not go for trading plan, and you can always go for pre-clearance route. Or if the value of trade is below the threshold mentioned as per your code, then even a pre-clearance is not required. So long as window is not closed for you, you can always execute a trading plan. The most important is, do you possess UPSI or not? Is the important question to be answered when you are executing any trade, not under trading plan but otherwise. Then at that time, looking at SDD and getting satisfied yourself reasonably that this SDD is updated, SDD is there, SDD is updated. For example, I had mentioned in some weeks back one question which somebody had raised, that I am doubtful as to whether SDD is updated completely by some of the departments. Now, can I ask confirmation from the department head that he is asking for a pre-clearance, and you in SDD you have not entered in his name? Does he possess UPSI or does he not possess UPSI? Such kind of abundant caution practices compliance officer can always adopt, so that he does not give clearance to any pre-clearance to any trade when the person is in possession of UPSI. And not oral, but a written communication will always help him to safeguard his position.
Okay, the next question from her on again. If a trading plan of a DP is approved and simultaneously the immediate relative of the DP also submits the trading plan for similar period, will this amount to overlapping of plan?
Absolutely. It says that not only you, but any insider, forget your immediate relative, even any other insider has given a trading plan, you cannot execute trading. So he may not be connected to you.
Correct. But that's a really onerous situation. I mean,
very onerous. Very onerous.
How is that CEO going to operate is something that is really difficult to understand.
Yeah. No, CEO, for CEO it is simple.
For him it may be simple.
Trading plan becomes very, very unpopular because of all these conditions.
Correct. For anybody,
so even this condition can be relaxed. Like, so long as you or your designated person or your company's DPs, or some other third party is proposing a trading plan, why should the promoter be blocked from operating? If he is collaborating with him in connivance, if somebody is doing, then it's a matter of investigation and not blocking trading plan.
I mean, there seems to be almost a tacit assumption on the part of SEBI that there is going to be a connivance the moment you have trading plans together with one another.
Absolutely.
Yeah, that would be like convicting a fellow before even trying him.
Absolutely. So such conditions can be relaxed at the cost of misuse. Because see, now SEBI need not be worried in my submission. Now the SEBI need not be worried about misuse, because the way SEBI is penalizing, and the arguments which are failing in SEBI, of course, some arguments are getting success in SAT, but the way SEBI is enforcing, the way SEBI has geared up in terms of enforcement, in terms of data, is very, very effective, and therefore, at the cost of some manipulation, SEBI always has enough tools to curb all those malpractices and penalize them to the tune of 3 times of the profits made, to the tune of debarring him from entering into capital market. Such kind of power SEBI has, and which SEBI has exercising. These powers are being exercised by SEBI. In this situation, maybe some genuine transactions can be allowed by relaxing those regulations. Yeah.
Vikas Gupte has 2 queries, one after the other. Is it necessary to give trading plan for ex-employee?
Any insider?
For more than 6 months. If so, can he submit trading plan for certain period for sale of shares without having possession any UPSI, provided desired price of share level is achieved?
Now you need to, now those kind of conditional trading plans are not allowed, unfortunately. We have to mention dates or trade. You cannot mention price. You cannot say that I will sell or I will buy if your price is so and so. Those conditions are not allowed. We have to have dates or trade intervals, and that's unfortunate. If this kind of a trading plan is allowed, it will be very popular.
Yes,
it will be very popular, because that's what is the strategy generally.
Brokers are instructed more or less similarly. इसके ऊपर चला गया तो बेचो, इसके नीचे चला गया तो खरीदो.
Right.
So anyway, from Vikas Gupta again, the second one is more or less in the same lines, and you could probably, yeah. So if desired price is not reached, then can ex-employee keep on submitting trading plan till desired price is achieved?
And
I think,
that's what the regulation says. It is irrevocable, and you have to go ahead and execute the trade. And first of all, this kind of trading plan is not possible,
correct.
and therefore, second question becomes redundant. But if you have submitted a plan and you had a strategy that I will sell if this is the price, and if you choose not to enter execute a trade as per that plan, then additional penalty provision of disgorging loss saved or profit made and 15 HB where there is no penalty prescribed. All those things will attract.
Essentially, there is no flexibility given to the, or very little flexibility given to the investor.
Yeah.
For whose protection, of course, it is probably a larger investor in the sense that most insiders are likely to be more influential than the average investor who does not have access to such information. But clear denial of flexibility is being implemented here. Okay.
In US, what we see is they do not have any minimum period, or there are a lot of relaxations. There is only one condition, that once you decide for a trading plan, you have to execute it. Yeah. But otherwise, there is a lot of flexibility. Probably because they have so stringent enforcement and with so quick enforcement, they generally send person behind bar. So that's what we have seen in past.
Yes.
In before 2005 or in 1992 PIT regulation, the enforcement was once in a while. Now every week there are orders coming in. Look at the number of, and therefore now SEBI also can probably take a little liberal and a trusting route, that we trust you. So, and if you do a market abuse, then you will be levied a penalty. But if it's a genuine case and if you are able to prove it, trading plan with a relaxed condition may be allowed.
Great. I think today we are clearly approaching the deadline that we normally place on ourselves, and there is a closure in terms of at least nobody new is posting any queries. If there are any queries that people would like to speak about, please do so. But I don't think there are any new queries that are coming up on the chat right now. So if you think if you think you've covered the subject well enough, which I believe you have, then I think we can call a close to today's session, because we are only 5-7 minutes away from the normal time closure. So while thanking everybody and inviting them again for the next week's session, which is like Makaranji said.
There is one question, Sunil.
There is, Brijbala. Welcome back, Brijbala.